And for Japan, which is the market we're most bullish on in equities, the fact that the yen is weak, it's about 143, is pretty supportive of earnings estimates revisions, which have been moving up in any case.
Yeah. Oh, sorry. Japan is the one place that those earnings revisions are moving up. But are you concerned about the strategic ploy here by the BOJ? They talk about flexibility. They're obviously creating very conducive conditions for anyone domestically, at the very least, that wants to borrow at a zero rate and then harvest the yield that you can get in terms of the 10-year paper right now. But do you think that they're playing a little bit of a game with fire? Because it's obvious what their intent is, but the unintended consequences potentially of what they're doing, because I would imagine that the easiest thing to do in the world is, if you're dealing with substantial amounts of money that you do have on hold, you could start to engineer trading strategies where you're shorting the JGBs, you're testing the BOJ, and then having asymmetric bets that benefit from the rising yield environment in Japan. All of these things that could start coming into play that they're not necessarily worried or thinking about.
Well, 10-year JGB yields are at 60 basis points today. So it's true that they've come up from negative 20 basis points when we were at the height of the COVID breakout. But actually, if you look at Japan's underlying economic performance, core inflation is in a pretty comfortable place. It's around about 2.5%. That's half core inflation in the United States, for example. We had an upside surprise in the most recent quarter's GDP. And a point we make is actually through the last 2 or 3 years, Japan's economy probably had the least disruption of any of the major economies. And actually, zoom back even further, the basic macro framework in Japan has delivered in the period of Abenomics. We have a decent nominal GDP growth environment, which we didn't before. We have a strong recovery in listed equities ROE. And a trend EPS growth that's far superior to anywhere outside of the United States. So that's why we keep coming back to Japan. And if our earnings estimates are right, on a 12-month forward basis, the market's trading only about 13 times forward PE. So that's a 7 PE point discount to the S&P, which is actually unusually attractive, we think.
It may have been the most stable market recently, but we're still a long way from normal. We're still a long way from knowing what the next stage is going to be. I mean, do you think we're going to proceed gradually and stably to a normal environment in terms of inflation and interest rates in Japan?
Well, I actually think we have on that nominal GDP growth already. And actually, if we look at the policy mix, which is accommodative monetary policy, which is still in place, fiscal environment that actually supports corporates in terms of making capex. We've had this big private capex recovery. We had the corporate reforms in Japan, and then obviously the third arrow reforms, which are very much underestimated. And on the trade side, Japan took leadership in the Trans-Pacific Partnership and keeping that going when the US pulled out of it under the Trump administration. So all of these things, together with the overall multipolar world environment where Japan's technological leadership is also attracting reshoring of capex, this all speaks to a very strong underlying macro environment in Japan, certainly much stronger than in China now, for example.